Yeah, hi guys, Stout here and welcome to my YouTube channel. So in today's episode, we'll be talking about how to identify a valid supply and demand zone. If you are new to trading, you might not have an idea of what supply and demand zones are. You might have heard of it before, but then you might not really know how it works. But I'll just give a quick definition and we'll just get straight into the video. A supply zone is a zone where selling pressure overwhelms buying pressure, causing a quick drop in price. And the opposite is just for demand zones, where buying pressure overwhelms the selling pressure, causes a quick sharp or quick buys in price. So let me just draw a quick schematics of what a supply zone can look like. Okay, let's assume price is making higher highs and higher lows. Higher highs, higher lows. Then automatically price gets here. This particular area right here, we can identify that place as our supply zone. And what will happen next? Price sharply reverses and sells. And the opposite for demand zone. Let's assume price is giving us lower highs and lower lows. Then price gives us a higher high. When price comes down to this zone, this place can be regarded to as a demand zone. And what are we expecting? A rapid push to the upside. That is what supply and demand zones are. But then for some reasons, you might have been trading this exact same thing, but it just does not work for you. I mean, supply zones and demand zones are everywhere in the chart on every single time frame, even down to 1 minute. You would see a lot of this, but then it just does not work for you. So let us just go straight to the video and just figure out why your supply and demand zones just don't work for you. So the first rule I have here is a valid supply and demand zone must be unmitigated before breaking a structure. It must be unmitigated. Unmitigated in the sense that price must not have traded into it before it breaks a structure. For instance, let me use this as an example. Let's assume this is our demand zone right here. So price has traded off the demand zone. Price now came back into it again, traded something like this. There is every probability that demand zone would not hold because it is already weak. Price has traded off it so many times. So the probability of such demand zone working is quite low. So every time you're looking for a demand zone or a supply zone, make sure the price has not been mitigated. It is unmitigated. Let's just go to a chart and look for an example of a mitigated zone. Okay, for instance, look at this. Look at this particular area right here. Look at this. That is a demand zone and then it has been mitigated. If you look at it very well, price came here, it's mitigated, it's easy, right? That is what a mitigation is. Price came to this demand zone, mitigated it, easy, right? Price came to this particular one and the next few candles mitigated it, easy. So that is what a mitigation is. That is exactly what a mitigation is. There is nothing more to it. So you have to always look for a zone that price has not traded into at all, right? Price has not traded into at all for you to identify your valid supply and demand zone. That is the first thing you should look out for. Let us look at this for instance. Consider this particular candle, right? The third candle just came to mitigate it. That is also a form of mitigation. Yeah, just the third candle. Price does not have to like go all the way. Then maybe after a week, then come there. Once, as long as price has tapped into this zone that is meant to be the supply or demand zone, the probability of it working has reduced. So that is the first rule to take note of when we are looking at a valid supply and demand zone. And the second rule I have here is a valid supply or demand zone must sweep liquidity to the left before breaking structure. It must sweep liquidity to the left before breaking structure. Let me draw a quick schematic of what that might look like. So for instance, price is trading off a demand zone, right? Good. So once price reach there, trading off it, price must sweep liquidity to the left before breaking structure. In this case, this is the liquidity price swept to the left before what? Before breaking this structure. Do you understand? Price swept this particular liquidity before breaking this structure. So always take note of that. Price always has to break liquidity to the left before what? Before a break of structure. That is another thing we should always take note of, right? The first one, it must be unmitigated. The second one, price must take liquidity to the left before breaking structure. And then the last rule I have here, the break of structure created by a valid zone must have a body closure above or below the highs or low on the time frame where the zone is created. Okay, I would make this easy and straightforward. The break of structure created by a valid zone must have a body closure. What do I mean by body closure? Let us look at this candle for instance. For instance, this candle right here, this particular bullish candle, if you look at the next candle after it, excuse me, if you look at the next candle after it, which is this black candle, can you see the black candle closed with a body closure? It closed with a body closure below this, not a wick, right? But then if you had to use this particular one, look at that particular one for instance. See what price did. Price closed above it with a wick. Can see? Price closed above it with just a wick. It was not a body closure. So for us to identify that, okay, fine, this zone has actually, is strong, you have to see a strong body closure above that zone. If it is a weak, there is every probability price still wants to, price is still indecisive. But then if you say a strong body closure above it, it is indicating that yes, the momentum has stepped in, and price really wants to use that zone to continue buys or sells. I don't know if you get my point. Good. So now let us go to a quick schematic of what all of this that I've just said. Let's move down here. Good. So look at this first diagram right here. What do you notice? If you are to look at this particular what's it called? This particular demand, you notice that price has already used this. Price has used that demand, it has mitigated it, right? This first candle has already been mitigated by this third candle. I don't know if you guys can see. Let me use an arrow. Okay, good. This particular candle right here, has been mitigated by this one right here. If you notice, look at this. Can you see it has been mitigated? So first off, that demand zone is invalid, right? It is not valid. Good. So the second one, the supply zone right here, has been mitigated by this other one. If you notice, it has been mitigated by that. So even if price should come up here, and do something like this, thinking, okay, we are going to use this to sell. Look at what is going to eventually happen. Price will get there, can give us a small reaction, then it will break to the upside, and then you lose money and you start complaining, why exactly did I lose money? Why? This is why. Most times we tend not to take note of these little things. And one other thing I want us to realize is that you have to see, if you want to look for sales, I'm sorry I did not remember to add that to the rules. If you are looking for sales, make sure the demand, a valid demand, is broken. If you are looking for buys, make sure a valid supply is broken. Let me write it. The fourth one, right? Let me write the fourth rule. The fourth rule. For sales, a valid demand must be broken. For buys, a valid supply must be broken. Yeah. So a valid demand must be broken for sales, and a valid supply must be broken for buys. And I am going to explain that, and that is like the main thing in this video, because even if you are just looking for a valid supply and you just don't take note of the demand broken, if it is mitigated or not, you are going to miss it right there. So for instance, this particular video, I said this particular chart, I said the for a valid supply demand zone must be unmitigated before breaking a structure. Look at this particular chart right here. If you look at the demand zone in this video, the demand zone in this particular schematics rather, the demand zone has not been mitigated. Can you see? This is the demand zone right here, this particular one. It has not been mitigated, right? Good. The second rule says a valid supply demand zone must sweep liquidity to the left before breaking structure. Look at it. A liquidity was swept, right? Good. What's the third one? The break of structure created by the valid zone must have a body closure above the eyes on the time frame in which it was created. The third rule, it must have a body closure after taking the low. Can you see? This is a valid body closure, right? That is a valid body closure. And the last rule says for a sell, a valid demand must be broken, and for a buy, a valid supply must be broken. Where's the valid? This is a supply schematics, right? So where's the valid demand right here? This is a valid demand. It's the zone that was fresh, that was unmitigated. See what happened to it. It was broken. Easy. Let me use a red. Okay, can you see? It was broken. So this is all we need to know if this I right here is going to hold. That is all we need. The first one says, I'll go over the rules again. If value supply and demand must be unmitigated. Look at this. Look at this schematics. The demand is unmitigated. The supply as well is unmitigated. Good. It swept liquidity to the left. Can you see right here? It swept liquidity to the left. The third one, it broke with a body closure. Can you see? It broke with a body closure. And then the last one, for a sell, a valid supply must be broken. For this sell, this demand was broken. This particular demand right here. So there is every probability, mind you, if you are trading just this alone, I'm not saying it is going to work every time. Of course, you have to add other confirmation entries, just such as structures, liquidity, and the likes. But then, if you know about all of that and you add this to your trading rules as well, it is going to help you eliminate a lot of losses. It will help you eliminate a lot of losses. And this is just the schematics for supply. The opposite works for demand. So in this particular example, there is every chance or every probability market comes to this supply zone, and guess what? Market will sell. Yes, it works most of the time if you are in the right if you're in the right position, or the right, what's it called, if the market structure is in your favor, if you know what you're doing, it will most likely sell. So, and what are you going to do? Your stop loss is going to be above that, and your take profit would be below this. Of course, in later videos, we are going to talk about confirmation entries, just for you to know if this zone is going to work. But for the sake of this video, this is all you'd have to know. Let me reverse the chart so you'd see the case for demand as well. The same exact thing, the same thing. Make sure it sweeps, make sure it valid, the supply is valid, the demand is valid. Make sure it breaks with a body closure, and then just wait for price to come into the zone, and then you look for your buys. Easy and straightforward. So now let's just go into the chart, and then look for real life chart examples. Yeah, so let's use Euro USD as an example. Please note that this is just me using supply and demand. In this particular examples, I am not checking the market structure, I am not checking liquidity, I am just trying to show you an example of how to get a valid supply and demand zone. Do you understand? Yeah, so let's just get straight into it. So the first example I will be showing you, okay, let me just, okay, look at this particular one. I can see price broke, price swept liquidity. Let me change the color. Okay, price swept the liquidity to the left, right. Price broke a valid supply zone with the body closure to the upside, right. And so what happened? Price came down into this demand zone for the buy, right. Look at this particular one as well. Price swept liquidity for one. Price broke a valid supply zone to the upside. Two. Price broke it with a body closure, if you can see, and then price came back into this, of course, and it bought. So the same thing over and over and over again. Okay, look at this as well. Price broke structure to the upside, broke structure to the left, right, rather, broke this valid demand, right, and see what price did. Price used this particular supply zone to do what? It sold off. Easy. Same thing over and over and over again. See 1 year as well. Price broke this particular supply, took out the liquidity to the left. See what happened here? Broke this with a body closure Did not break it with this particular one, but then see the next candle. It's good body closure. See what happened. Up, price came to that supply and of course it sold. Mind you, I am not even using structure in this case. I am not using structure at all. But see how easy it is. Same thing here. Price broke, took out this liquidity, swept it to the left. Price took out this particular. Okay, let's use this. Okay, this is it. Price took out this particular valid demand zone. See what happened here? Price came and then sold. The same thing happens over and over and over again. This is another one right here. Price swept this liquidity to the left. Price took out this valid supply. See what happened again? Price used the supply zone and sold easy. If you can apply this to your trading journey, your trading, what's it called, the plan, it is going to make things so easy for you. Easy. And this is just me trying to, this is just plain a plain analysis without structure, without liquidity, just valid supply and demand, just being able to identify a valid supply and demand and see how many trades we would have been able to take in the course of the month here. So if you know you've been struggling with supply and demand, I'm very sure this video has been able to help you to identify valid supplies and demand. And if you really enjoyed this video, do well to subscribe, share with your friends, and then leave a comment. And you can also comment under this video if you a particular topic you would love me to talk about, so it's going to like help you in your trading. Yeah, so don't forget to like, share, and subscribe, and then also don't forget to trade the stealth way.